How you doing, everybody? My name is Kurt Henry, and I'm talking to you from the Mortgage Center. I work together with Randy Henry, and we are a part of a mortgage brokerage. Our job is basically to work with multiple banks and lenders, and we just get them to compete for you to get you the best deal when you're looking for a mortgage. So this is a weekly mortgage update just to let you know what's going on in the mortgage market. And I also just wanted to talk to first-time homebuyers a little bit just on some basic things as well. So in terms of mortgage rates, a 5-year fixed rate is in around 3.59%, or a variable rate is in around prime minus 0.75, which is about 2.25%. And in terms of some basic things to know if you're starting to think about getting into the housing market, in terms of buying a house for the first time, or if you're thinking of doing it for the second or third time, just a couple of things to go over, or that you would want to know. Is first of all is the term and the amortization. So the amortization is the amount of time that it takes to pay the whole mortgage off to zero. So a standard amortization is like 25 years. The maximum amortization today is 30 years, and the only reason why you would take it to 30 years is because it makes your monthly payment lower. But certainly if you have the mortgage for 30 years compared to 25, you would be paying more interest over time. Having said that, you can quite often you have options, like if you were to take a 30-year amortization, you do have options within the mortgage a lot of the times to increase your payment, and by doing that you'd be shrinking the amortization because you'd be paying it off quicker. So then the amortization is broken down into terms. And a standard term is like a 5-year term. The whole idea of the term is that that's the amount of time you're signing up for that, for say that mortgage or with that bank for. So like your payment would stay the same, your interest rate would stay the same within that term as long as it's a fixed rate, and any condition you sign with the bank is the same for that term. And then when the term is done, so say it's a 5-year term, in 5 years the mortgage is then up for expiry or up for renewal, and then you'd have to renew the mortgage for another term. So so that's kind of how that works. In terms of the down payment, so if you're looking at buying a place and you're wondering how much down payment you need, you can get around doing a down payment at all. So we do have options where you don't have to have a down payment. But if you want, like, say, the best mortgage rates, then the minimum down payment would be 5% down. So if it's a $200,000 house, 5% down on that would be $10,000. But like I say, if you don't have the down payment, we can get around that in a couple of different ways. And then the only other thing to keep in mind when you're buying in terms of cash that you need is closing costs. So closing costs are things like your lawyer's fees, land transfer tax, although as a first-time buyer you don't have to pay up to $2,000 of land transfer tax. And there's a few other adjustments as well that will come a part of those closing costs. So a lot of times what the banks want to see is that you have 1.5% of the purchase price set aside for closing costs. So if it's a $200,000 house, 1.5% of that would be $3,000 that you should have set aside for closing costs. And that's the one thing that can't really be made a part of the mortgage. So it's the one thing that you really do need to have in order to cover some costs there. So if you want to buy a house with as little cash as possible, then you can do it with no down payment, although it is good to have the closing costs set aside. So if you have any questions on any of that, feel free to ask the person that sent you this video. And if you have any other questions, feel free to give us a call. The number at the office here is 905-436-8010. Thanks, and have a great day.